Okay, let's see. Let's start. Let's see if people got online. Okay, a few people online. All right, let's start. I'm going to start with the big picture. This is what it's about. Currently, we can see this is the area of demand based on previous price action, and that's why we've got support here at the moment. Question is, what's going to happen from here onwards is not really that important because we've got no trend, and it's not. So the small picture thing is not going to really help us here. But I'll talk about what we're going to look for in this structure to decide which way it's going. Anyway, let's look at the bigger picture at the moment. What I want to do is get my weekly chart out and start from there. Oh, no sound. Give me a sec. Can people hear this? Can they just say yes? Uh-huh. That sounds okay. All right. So not sure. Yeah. All right. Let's continue on. That sounds okay. Right. So what I want to do is merge these indicators so I have some real estate space on the screen. We can get rid of this one here. The MACD is pretty obvious. Don't need that. The MACD is not going to really help us in this situation. And all right, let's see what have we got. I don't need that. I don't need that. Okay. What chart? Bitcoin, Coinbase. All right. Right, let's go. So what do we have here? There was in the past I did talk about on a few charts. Let me change this one to something that's got more history. Was it BTX? Was it BT? Mixing it up. Okay. I think Bitstamp has a good history. Yeah. All right. So I don't know if anyone's seen this before, but this chart basically shows you from a big picture perspective that the 1.618 tends to be acting as support. So we've got this confluence at the moment as support, and the question is it going to hold? And that's a big question that no one can really answer. Now, what else can we look at that gives us some idea on what's going on? If you could look at this swing high level, once we break that swing high, we have price accelerate. So what I'll do is I'll just add this other thing here. It's a recording feature, but it gives me tools. So I get this pen, and you can see over here we had our resistance in the past, and then when we broke that swing high level from swing low to swing high, we had that massive acceleration. And then if you look at in the past, if we had that similar, where is it? Similarly here, swing high, swing low type of thing. We had resistance up to a point, and then we broke. we accelerated. Now the question is this acceleration finished? And in most cases, we had one here where there's a swing high to swing low, and the point I'm trying to make here is when price did break, it tested this swing low area that had a lot of, for many months, or yeah, more than a year or so. It became a test, a support level, and then price went up. Now this is what is everyone's looking at, this potential area as another swing high to swing low. So if we were to have price coming down all the way here, that is going to be a pretty obvious area of a swing low back high. Now the question is, will it reach there? So we have this conflicting information that here we're finding a lot of support, but if it does break down, then you can see here that there is pretty much a gap on the weekly anyway, where there is no pause. It just swung up high. So if we lose this level, it's likely to come down, but the question is, where is it likely to come down to? And the theory is, a lot of people look at this level as a major point where there was a pause, and it took a few weeks to break it, and then went upside. So it makes that makes sense that this is going to be a strong support area if price was to break down. Now, I don't think it's going to go down that low. Okay, so here's my case against it. If we look at, so what I'm going to do is just remove this for a sec. And I'll get rid of that one as well. We're going to use our Fibonacci again. If I use that down to the top, and if we could, I might as well zoom in so you guys can see it. Ever so slightly. We could probably use this level here with the wick, because the wick is pretty, might as well use a whole lot. And what I did in the last one or two posts, I'll do another one close up from there. To there. As you can see, it's the 1.618 is still. So we've got the 3618 on the fib extension, so it's a golden ratio. This way up, we've got the 1.618 as a support for this impulse. And then if we look at the bigger picture, but you've probably seen many times before, from the bottom to the top, the 1.618 again. So the 1.618 constantly comes into the picture, and therefore this area demand. All right, so this area is of high demand at the moment. So if price was to break down, so what's happened this few weeks? We had some momentum with these candlesticks, and you can see that we've pretty much lost what we gained, but we still have this bottom section left. And if you ever look at the previous bottoming, any bottoming formation, especially like this one here, you can see a fair bit of wicks on the bottom. This one didn't quite have it, but what we see here is two candlesticks, or even three, of capitulation. We have 1 week that it sort of recovers, and then we have more to the downside, so 2 weeks more, and then we have this bottoming effect. Similarly here, we have all these red candles, capitulation type of thing, and then momentum to the upside. So this was capitulation, exhaustion, or selling, and now we've got all these wicks. So to me, it does represent a bottom down, or the bottoming of price. In other words, finding support, and it's likely that 30K was the bottom, and it's turning up that way. But the problem is, what do we expect in this area in the meantime? Well, if we look at these prices before down here, let's see how long did it take. Let's put the date range. So when we had, you can say, after those big drop, pretty much 100, 15 bars or 15 weeks to really find the bottom and then continue up. So you can say that point there is 11 bars or 77 days for the bottoming, and that's the bottom of a bear trend, a bear market, or a capitulation. So I'll rather use a capitulation or a big drop, a strong drop that is the initiator. And similarly here, if you look at that, we have a big drop of volume and then momentum. So we use that. That is not applicable, but this one is more so. So if we use this one as a bottoming, that's 42 days before it went up. And you can see how price held for that week, for those weeks. You had one, like if you look closer, you have a week, a bit of a gain, and then you have a bad week, and then a good week, bad week, and then up it goes. Similarly here, you have a few bad weeks, a good week, and then you lose that good week, but you still find support. So the candlesticks become very important in this observation. Now let me see if while I'm doing that, if anyone's got questions. Okay. So to me, the candlesticks are telling us a story that this area is good support based on the red candlesticks and the green candlesticks on the weekly. So the weekly is telling us that it's pretty positive. Okay, but how do you make a trade is, well, it's an accumulation strategy. So if we accept that scenario that this is the bottom and this purple band is an area of high demand, that means buying the dips. And so if you accept that case, then the strategy comes out of that, doesn't it? So you pretty much look for the dips, have some cash, buy those dips. So now this is going downwards, and we'll get to that. We'll go look at the daily, and then we'll look at the hourly. But for now, if we can accept the fact that from a candlestick perspective and historical charts, whenever there is a big drop, there is usually a bottoming effect and an accumulation effect, and up it goes. It's even similar down here as well. We have a big drop here, and then we have this bottoming effect as well. Now that's the weekly, and what I'm going to do is I'm going to look at the indicators to also give you an idea on what's going on. Does it support that theory? Before I just do that, I just want to look at the monthly. So if you look at the monthly, here we have 1, 2, 3 months, bad three, pretty much from the big drop, we have 2 months of descent. So we have similarly here, we have one big drop, a month of descent, and potentially another month here of being bottoming out. So usually 2 to 3 months of candlesticks is a good indication on what's going on. So that will be my strategy. So if I were to zoom into there, using the candlesticks on the monthly, I would use this monthly candlestick area of support right there between those two buggers as the average price to go in. All right, so the monthly is significant, and that value, if I was to look at it properly, 33,000. Actually, might make it. Let's just even this out. And let's zoom in. So let me get this up and just zoom in with the browser so that pictures could be bigger for you guys. No, no head and shoulders. No, ignore that. Everyone sees a pattern and they think it's head and shoulders. No, head and shoulders is not that easy. You will listen to most traders, proper traders, and they'll dismiss the head and shoulders. So if I can do that, it's not easy. I'll need my glasses really. Give me a sec. Because you want to get a good price, a good level of candlesticks. So if I do that there, I think that's the level. So the monthly is 33,000, yeah, 400. Okay, so I'm just going to put that there. Right, so that's a monthly support, and the one before it, that's a monthly support as well. So we look at the monthly to get the average value, and that one there is 28,000 or 29,000 pretty much. Okay, so we'll use the monthly candlesticks to get an understanding on the range they can potentially go down to, or support, and then we look at the weekly, and the weekly is pretty much that band there, right? So we had the weekly resistance right there with the wicks, and that's where we probably got the rejection. And then we've got the body of the candle on the weekly, which is roughly around there. And so our weekly candlestick is roughly the same. If I was to get the two greens, that's probably the average weekly. And the weekly bottom is the same. So that's the weekly bottom from the candlestick body. And where did my monthly stuff go? Let me get the monthly. So I'll need to make sure these monthly stick into the weekly. Oh, there you go. So I want to change the color to that and make that purple. Okay. Actually, that one I had to put the weekly into it as well. So we look at the weekly and then just spread this out a bit. And now go to the daily and we should see some confluence. So if we look at this now, you can see price range from a monthly perspective. So the monthly, this month, bottom one didn't come into the picture at all. Where's my weekly stuff? Oh. Okay, so that's the weekly there, that blue one there. 32,000. That's a weekly support. So the monthly does make sense. It's coming, this monthly is the monthly one. Is acting as support on the average. So if I was to average in, I will use that monthly and this weekly, that band right there, this section here. So I'll get rid of this purple and move it up. That'll be my averaging in accumulation period. So I think that band will be where, if you were to accumulate, that's the area. It has confluence with these fibs as well. So if we were to now look at what you're seeing is me, I suppose, putting at work how to do this. Maybe we'll use this level here. And I'll just change this color scheme because it's quite strong. And you can see it's just below the 0.5. If I was to use it down here, let me just pull it down a bit from top to bottom. And where is it? I'll reverse that. One 3 6 1 8. No, that's with a log on, so we need that. Okay. So yeah, the 0.5 becomes a fib level as well on many occasions. So 0.5 fib is almost aligned with the monthly. So there's a few reasons why we do that. And if we get the moving averages, as you can see, we have the what they call is the dead cross, but to me that means nothing. It just means historically this crossover the moving averages was a bearish move as well as no impact at all. It actually turned the other way around as well. So this bear cross or dead cross, sorry, not bear cross, dead cross, um, to me it's insignificant. It has nothing to do with price. What if this was to go into it? It would have been a perfect area to short, but we didn't make it. So that would have been a trading opportunity to short there, because that was a confluent with many other things, and I spoke in the past. This level of resistance, that would have been perfect to, the dead cross was roughly around there, and that would have been a good area to short or sell. You get rid of your coins and then buy the dip. So this ranging price is going to continue, in my opinion, and this purple band is the area of interest. Now let's look at the indicators that support this theory. Okay, so weekly indicator. I do hate messed up lines. So we've talked about that. Now, if you look at this indicator, and if I maximize it, just to give you a quick, it's a good indicator based on wave. It's a wave trend method, and if you look at areas of where this crosses over, so if I get the right indicator, so right here now, right there, we on the weekly we're getting a crossover of the two RSIs crossing over right there. Historically, if we look at previous crossovers there on the weekly, crossovers there, we're going to compare, all right, and there. Now there's one aspect to this method, and that is the other lines as well. In many cases, if this crosses over and we're above 50%, it's usually bullish. So let's look at that. Similarly here, when we have a crossover and we have a 50% level, it's going to be bullish candles. Similarly here, and so we've got this crossover there, right? So keep that in mind. And so when we pull back this, you can see in this case where the green crossed the red and it was above 50%, we had that run go. If over here, this one here, we had a crossover, but it wasn't above 50%. You can see how long it dragged out, but it was the bottom of this level. So it was showing that there is sideways motion, but it's turning upwards on the weekly. So this green area is turning up. The orange area is also going up towards 50%. And when it does hit 50% right here, you can see all right there where they cross over at 50%, you can see price go up. So this method, along with say this slow stochastic indicator, we've got the crossover on the weekly as well, right there. We've got this horizontal which indicates there's a crossover. Similarly here, crossover, it's a bit delayed compared to this, but this one has a few more features, and it tells you roughly that the bottom is roughly in. When it crosses over, so end of today really, we've got 21 hours. This pretty much says that it's going to cross over, and there's no reason why it can't range on sideways for the weekly, but the fact that we're having a crossover is a positive indication that it's probably less likely to drop. Now, if we get another weekly of a bad week, this will obviously turn the green candle down. But at this current pace on the weekly, this crossover is looking positive to support the fact that this might be the bottom. If we go to a 2-week, where's a 2-week? 2-week chart, we can see momentum still onto the downside on this one here, but the fact that this orange is likely to turn around, it's like it's really overextended compared to the others. If you look at it, it's really matches this one here right now there, and you can see what happened after that. You had a good week. So, and in this case there, yeah, it's roughly the same. And this is coming down. So if this was to start turning up, the green will start turning up, and this red won't make 50%. At the moment, on the 2-week, we haven't made this red RSI on the 50% level, so it's still looking all right. So 2-week chart, you can see it's just sideways as well. So that's the only positive thing that comes out of this, is that on the weekly, this indicator is crossing over, which could potentially push the price, start beginning the incline. And this orange level is currently 30%. So it hit 2%, and now it's 30%. So that's another positive. So it does look like this moving average as well could be acting as support, potentially here, like you've seen over here. It acted like support and kept going. If this was to be lost, if this price drops below this orange moving average, which is a 50, then it's likely to drop further down to this level here. And I should put that in there. So we have a few levels with these moving averages that will tell us areas of confluence. So this, if it was to drop from there, I would have the 28K, and then this is my next area of interest for the bottom. If we were to lose that, this notch here, and that's usually that is also another fib level, significant fib level as well. So from the weekly perspective, at the moment, it does look like we overextended, and might have come down to an area where there is potentially sideways or reversal at this point. And obviously, it really depends how the following week comes up. So if we were to look at trading this on a daily, there is nothing that we can do here at the moment. You can see that, let me just jump onto another chart and go to the 4-hourly, probably better. That's not good. So what I can do is just get rid of all of that. I'll need a better chart than that one. Where are the other charts? Okay, we'll use this still. Actually, this was so we've got BTC USD. I think I had my stuff on that one as well. Okay, that wasn't it. Coinbase, was it? The Coinbase one. So we go to the 4-hour, normalize that. We had a 200 moving average on this one. No, that's not the one. Oh, just leave that there for now. And we'll get rid of this. So from a 4-hour perspective, we lost two key levels. That horizontal level, this one here, we lost that, and that's going to act like strong resistance. And we also lost this one here, which was supposed to act like support, and we lost that as well, which will act like resistance. And now we roughly got this blue one, trend line, acting as resistance as well. So the small picture, we have a few levels of resistance. So what it tells me is we are likely to revisit the bottom, and what that bottom was is this range here for the time being. That we're probably likely to revisit this area. However, having said that, we did drop a fair bit, and as I said before, that could be an area of support, a bit of demand in the micro space based on previous price action there. Around here and here, we're finding support. If we're to lose that, then I'll look at the 32K range. And this trend line, if it breaks that trend line, I still wouldn't go into it. If I was to consider jumping into this, I want to see price hit, pass, break those points, retest, and then I'll look to jump in then. I will not go long until this has happened. All right, in this space. So if this is a reversal to the upside, do not jump in until you see it break these two levels, which is a strong resistance. If was to break, then it makes sense to jump in, because it will have some rejection at different levels, and the rejection area will likely push it down to this retest, and then up it goes. So that's my strategy moving forward if I was in the short term. Meanwhile, we have our A, B, C, D, and potentially E here. So this level just above that area could be our next point to for a potential reversal with this broadening wedge, ever so small broadening wedge. So that's how I'll look at, if I was to trade this, look for the drop and then wait for this breakthrough of this trend line, pretty much. And it does have the current features of an Elliott correction wave. So from there to there is probably a small trade opportunity. And if it was to break those two resistance lines, there's another long trade opportunity. Meanwhile, if this was to go up there, I would short it. I'll look to short and see the retest here. So if it was to break out, I will look for shorting down here and then see what happens after that. So those are the things I'll be looking at in a small time frame. And all right, so that's what I got for Bitcoin at the moment. In the small picture, you can see here there is a formation. You've got your first point, you've got your second point. So this area does look like an area of strong support. Here we have downward pressure with the green, so it's likely to drop further down, like I think I said, to this level for an entry. If we were to lose this area, I dare say it will not come back up to this level for a shorting. But if it was to break, I would look for yeah, I would look for somewhere potentially at this level here to short. So if price drops, I think it will go very quickly down. But the 28K range is not going to do it. Not with this structure being broken down to. So what we'll look at is this formation's height, and the target, if it was to break down, no head and shoulders. So yeah, 21K it looks like, roughly. So if it was to break that on this, so let's clean that up a bit. I don't think it'll break down, but you've got to be careful. If it does break this level, um, let's push it down a bit where those wicks are. If it was to break that level, this band, um, and using this formation side, let's use this one here a bit more conservative, because this one's not really counted. It's from here. That'll be the A, and that will be the B. So that height is roughly that there. Sorry. So I'll use that as a means, and that's pretty much 22K, which has confluence to this area here. So that structural breakdown has a target around this area here, which makes sense. Yeah, it does make sense with the all-time. This was all-time high resistance level, so it's just above it with this range. So there is a possibility if we if we break down that we go down that further. I don't think it'll go further than that down there, but that will be a lot of that will be a good place to buy in a lot. But I don't think that's going to happen anytime soon. What I do look for in this one here is a swing low. If we have the swing low here and then a bounce, then it'll be a good time to short somewhere around here, because you want to establish this one here first. You want to make sure that that's been touched. So when you get the bounce, it's a good short opportunity for the next touch, and potentially get the W formation going, and then a bullish momentum. So it could be double bottom, or it could be slightly above, and then up it goes. And then again, there's a good scenario to go long. But you can see what's happening now is, in my opinion, it's coming to an apex. All this is coming to this apex for a massive breakout. I don't think it'll pass this level for a while. So it is pretty much a triangle, and a decision is going to be made pretty much potentially mid-June. Hold on, no, mid-June, end of this month really. And I'm not sure what the history shows on what happens in June in the past. So let's have a look. If there's June, July used to be, I think it was bullish really. So July here, June, July, that was a bullish to the upside. If I was to go back somewhere else, June, July, bullish here as well. So every June, July, I recollect, was bullish. So that that's what supports it as well. And that's pretty much it, what I have for Bitcoin at the moment. Any questions? Let me look at Facebook, I'm sorry, YouTube, and see if there's any questions there. Okay, random, hello, I just joined. Do you still short at this levels? So shorting is dangerous unless you see a setup. So you need to don't just short because it's there. You want to see some setting up, like I said there, where you get the swing low and a bounce, and then a shorting opportunity there at the top where prior resistance, and then short and make that small area your target for the bounce. if you short there and it breaks through, so I would, if I was to short on this bounce, I'll short and then I'll take some percentage profit, and if it breaks through, then let it keep going. If it was to break through here, the current purple band, and then definitely short from there, because that's going to just steamroll all the way down. So you've got to be very careful where to short and where to confirm. So I would look at indicators as well. Look at the MACD, see if there's bearish divergence in the picture before you short. That's a bonus. And I will look at, from 1 hour to 4 hours for potential shorting opportunity. So the more things that you want to, it's not one thing that gives you a shorting signal, it's a combination. You also look at the candlesticks on the small time frame. So a good way to learn is look at previous candlesticks and what they tell you. So like for instance, you can see here where this, once that trend was broken, you can see that there was a bearish divergence. I remember recollecting, and I shorted there, and I got rid of my coins. I should have got rid of all of them, but hindsight, I thought this was going to be a so I thought, yeah, I did sell or take profit, but I thought this was going to happen, and so that stuffed me up. So I should have got rid of more and buy more cheap down here. Anyway, that a lot of people fell for it. A lot of people thought that once you break this key resistance level, which had a lot of spots, and I think pretty much the whales knew that, and they just pushed it through. A lot of us got it wrong. We all thought it was going to bounce up from that area. So the fact that it broke down, now this is major resistance, and it's likely to come down, in my opinion. So look for a shorting opportunity soon. As this goes sideways and this trend line comes down, see what happens. It's probably likely to drop like that. Maybe at the trend line as a pivot point, maybe not. But that's what I have for now. If I was to, so I'm not going to put no cash in. I'll just look for small trades, opportunities. With the big money, I would look for this bottoming formation to be confirmed, and look at the indicators on the daily and see what they say. And that's pretty much it on that one. Now, if we look at, so the altcoins, if you look at, so this is DOT. DOT is against Bitcoin is really dropping. So that was one of my trend lines. That was the other one, and you can see that broke down as well. So against Bitcoin, DOT's doing crap. If you look at this Elrond, so I'm looking for a breakout. I'm not going to jump in to go along until it breaks through that. You can see this is almost potentially a shorting opportunity as well if this was to break down. So I would look at this level. So that's the second touch. So this could potentially break down as well. And if it breaks down from here, there's a shorting, because that's likely to keep going down to the next fib level, I suppose. One of the things that I should have mentioned on the short time frame, if I was to clear this all up, and so I'll go to 1 hour. I like using the 1 hour for signals. I usually put the 1350 moving average. I like to see the 1350 moving average also crossover like this. So I use that as a tick in the box, a checklist. So if this is our main trend line as resistance, and we have this horizontal level as main resistance, I like to see if price breaks this up, I still want to see this 1350 moving average crossover for confirmation. So something like this, crossing over for a signal to jump in for a long. And that is another item for my checklist. So having said that, if I was to look at these other buggers, I will do the same. So until I see a crossover, so I'm looking for the 1350 crossover to go either up, and if it breaks this level, I'll be looking for the crossovers either before or after for jump in. They will tell me that this structure is a reversal structure. So this could pretty much wick, and then could do that as well. So you've got to be very, very onto it. But they're also getting hammered. Some aren't, like this one here. This one is sort of holding its place. Now the thing is, if you follow me in my private chat room, this is what's concerning, the US dollar. So the US dollar in the past day or two is pretty much has found support. And in the day that Bitcoin was dropping, the US dollar was going up. So the markets are closed at the moment, but US dollar has found support. It seems to have done a double bottom, yeah, and is likely to. So you want to see if it breaks that level, the US dollar, this is likely to continue up. And what happens there is you can see here on the right, SP 500, it's already broken a key level. It's gone bearish, the stock market. Gold is pretty much dropped as well in the on Friday and Saturday. So Bitcoin is not isolated on its own. When the other markets are dropping like this, and because of the US dollar, it's going to affect Bitcoin as well. So if this US dollar continues to go up like that, well, Bitcoin is likely to drop as well. So you need to make sure you keep an eye on that. And that's one of the things that is concerning, because you can't really gauge what's going to happen there. And I think this is the main reason why Bitcoin is not doing well on that day. Stock market correlation, SP 500 always had correlation with Bitcoin on many occasions. Gold was on and off. So gold is pretty much done a broadening wedge, and it's broken down. So it's reached its first target. It's probably going to reach its second target or third target. So gold is potentially going to drop as well, and Bitcoin is no different. With the action stocks had, I think we're going to go to potentially. Stock market has broken. The SP 500 has really broken, and that's a broadening wedge as well. You can see, and it could potentially come down to here to find support. But if you watch the news, I think they're all saying panic stations. So if it's panic stations, Bitcoin's not going to be doing well as well. So yeah, I would be bearish than bullish at this point. Play on the safe side. Be pessimistic if you want to, if that's the word. It could also be an opportunity, really. The problem is when the dollar goes up and the stocks drop, where does Bitcoin fit into that whole big picture? Because the institutions are picking up Bitcoin, gold is dropping. So is money flowing from gold to Bitcoin or silver to Bitcoin? Don't know. It's very hard to work that out. I suppose that the answers will come out later when everything's done and dusted. Here I have Matic. Matic is come to a key trend line as well, around here. So this existing trend line, if that breaks, that's going to be a big drop. So right now, Matic is looking potentially to touch it and find support. If it breaks, there you're going to have a great opportunity to short. So the alts aren't doing that great. Link is the same. Link is pretty much, Link is not looking good either. If you look at that, And so what I have on link, that long standing trend line is likely to be touched, and that's supported by this wick here, that wick there. So we've got a number of reference points that this is likely, most of the alts are likely to come down. Ethereum is no different. Ethereum's lost a key level, and you can see when it drops a key level, like this one here, we lost this key level, and it didn't really come back up to retest. So it's got this last stage of support, and that's where it is. So Ethereum is not looking good. So if Bitcoin was to drop similar like this, you will see a similar behavior where it finds support and then potentially go further down. I see Ethereum coming down to this level here, to this apex. This triangle apex is probably an area of 1800, and 1800 is probably 1800. Let's see if that was what was here. That was 1400. Okay, so 1800 is probably a good area, and then if you do the Fibonacci's on it, so if it's already broken, I don't know how this is going to stay up. That is my level, I would say. The next level, which is about 2100. ADA's doing crap, so ADA's pretty much broken down as well, and it's coming down to this level, this dotted line, really. So shorting opportunities are more so. I would be looking to short more than go long in most cases. And Bitcoin Cash is almost done. It's going to break this level and then capitulate more. Let's see what's on the left. Yeah, so the alts aren't doing well. Not at all. Only one or two they're doing well. So I am going to wrap it up now. Hopefully that answers a few questions. There is a few scenarios. There's only one bright news, and that is to do with this moving this indicator on the weekly. This indicator on the weekly has a crossover, which is bullish, and so that this could be the bottoming in. But alts, every time Bitcoin makes a move to the upside, the alts will probably lose more and more ground. So if we look at Bitcoin dominance, let's see where it is. So you can see Bitcoin dominance is finding support at this level. So the 618 is going to act like resistance. And if I do from there to there, so yeah, so it could potentially go to the 0.5. So I think Bitcoin dominance looks like it's doing a reversal. It's probably likely to hit that level before it goes down, similar to here, right there. So that the 0.5 Bitcoin dominance is likely to go up more. I see this reversal here. So this is the weekly chart. So the fact that Bitcoin dominance is going up to 50% and potentially more means there might be more downside than up, which is not a good thing. For Bitcoin dominance to go up, it means that Bitcoin is likely to drop more at this point, which, as I said, goes down to the bottom. Currently, this is acting as a resistance for Bitcoin dominance, but this indicator is telling me that there's pressure, it's upward pressure on the daily, on the weekly. So that does show you that Bitcoin might drop more, but how much more? So it's going to drop. This is likely to drop, but how much more? Can it hold this level? That's the question. Yeah. Anyway, that's what I got. I'm going to wrap it up, guys. Have a good weekend. I'll talk to you soon. Bye.